Hello and welcome to the show. Today is June 28th, 2022. Let me start by saying that I am not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. Today we'll be talking about metamaterials and metamaterials torchlight preferred shares. Those are stock symbols MMAT and stock symbol MMTLP. On Friday there was a direct offering announced. An 8K was released on Monday, and I have some thoughts about the price of oil and what's going on in the Rio Grande Basin. So this is what was released on Friday. We see that a direct offering was announced for $50 million and 37 million shares at a price of about $1.35 per share. In addition, there were warrants of 37 million shares at $1.75 per share exercise price. So that's what happened on Friday. The stock took a dive. As a result, owners were caught unawares. Who knows what happened? Panic in the streets. On Monday, we had information about the Form 8K that was released. We saw a John Berta tweet asking George Palikaris for more information. He said there would be an 8K coming out on Monday, and then there would be more information from that. This is the 8K that came out. Links will be provided, of course, but you've probably read this. In essence, it detailed out what was said earlier. In addition, it said that there are 36 million shares after this offering. And it gave some further details about the offering. It talked about the use of the proceeds. It says, we estimate that the net proceeds from the offering will be approximately $46.5 million. After deducting the placement agent fees for this offering and the estimated offering expenses payable by us, and excluding any proceeds we may receive upon exercise of the warrants. So basically, they're going to get $46.5 million. In addition, we currently intend to use approximately $5 million of the proceeds of this offering for development costs associated with our oil and gas activities that we acquired as part of the arrangement agreement with Torchlight, including for certain development activities related to the Rio Grande project in Hudspeth County, Texas. And the remainder of the proceeds for working capital and general corporate purposes, including ongoing operations and capital equipment. Okay. Basically, $5 million is going to be spent on the Rio Grande project. Okay. So $3.5 million goes to agent fees. They're getting $46.5 million, which leaves $41.5 million for working capital and general purposes. In addition, we have a few more details about the warrants. The warrants are not tradable. How do I know this? Because it says there is no established public trading. There is no established public trading market for the warrants, and we do not expect a market to develop. In addition, we do not intend to list the warrants on the NASDAQ Capital Market, any other national securities exchange, or any other nationally recognized trading system. They don't plan for the warrants to be traded. Essentially, the only way you can get the warrant is if you bought these shares in the direct offering program. Then you also got the warrants, which currently will have a zero value because they have a strike price of $1.75. But we expect metamaterials to go way beyond $1.75. So chances are they will be exercised. When they're exercised, metamaterials will get $1.75 for those shares. 37 million shares times $1.75 is about $64.8 million. They're exercisable only 6 months from now, starting 6 months from now, and they expire in 5.5 years. So that means that metamaterials will get something in the range of $111 million from this entire deal. Okay. What do we expect that they're going to do with this $5 million that they got for Rio Grande? Don't know. We can speculate. We know that last year they spent $14.8 million to drill 4 test wells at a cost of $3.7 million per well. Okay, we know that they need to drill 5 test wells in 2022 per the lease agreement. And in order to maintain the properties as per the lease agreement, they need to drill 5 test wells. If the test wells cost $3.7 million apiece, that means that the total number of wells will be somewhere in the range of the total spending for the test wells will be somewhere in the range of $18.5 million. Okay. That's what you can project for 2022. They only got $5 million. So, as a result, there's not enough money to drill 5 test wells, but there is enough to drill 1 additional test well, so they could drill a test well. There's not enough money to pay back the $14.8 million in 2021 for the 4 test wells, but they could spend the money on activities related to the spin-out of oil co. Okay, that's a possibility. Another possibility is maybe convert some of that test wells to a production well, right? And in that sense, they can convert the possible probable oil into approved oil, right? And if you've got proved reserves, they're worth more than possible probable reserves. Now, the question comes up. The stock price went down a lot. How did this affect the shorts? Did we see a lot of short covering? Well, I don't know, but we do have 2 tweets that came out from Brandon Nodnarb and TGS Trades. Okay, they are tweeting out Ortex data for metamaterials, and we can see what they have to say. So, thanks to Brandon Nodnarb and TGS Trades. If we look at the cost to borrow, right? So Brandon tweeted at the start of the day, and TGS Trades tweeted it at the end of the day. If we look at the cost to borrow, it was around 141% start of the day, right? And then it varied through the day, and by the end of the day, it was somewhere in the range. It got as high as 205%, and was as low as 72%. This is the cost to borrow if you're shorting. This is the fees that shorts have to pay. They're pretty darn high fees. Would you be paying these if you didn't have to? Would you just close your short position if you could? I think they would. I think they can't. That's the problem, is that the shorts are likely trapped. Okay. Anyway, we know that we know that the short interest is about the same, but we also have noted that the days to cover has decreased significantly, right? Days to cover is down. And the question is, why are the days to cover down? I believe the days to cover is down because we have increased volume. If we look at the volume for the last few days, we see that we have had an unusually high volume on Friday, Monday, and Tuesday, and some high volume sometime in the middle of last week. Okay, normally it trades 2.4 million shares, 4.4 million shares, maybe 6.5 million shares. It normally doesn't trade above that, right? It trades between 2 to 6 million shares, right? But lately it's been trading 70 million shares. It traded 24 million shares, right? That's a lot. So let's see what happens. Let's see if we were to just add up, just take the 10-day average of prior to the increase in volume, and the 10-day average after the increase in volume, right? So the yellow, we got, the last 10 trading days ending on June 23rd. And in the blue, we got the last 10 trading days period, right? So the last 10 trading days prior to this increase in volume, it was about 4.5 million shares on average, right? And in the last 10 trading days, the average volume is around 15.2 million shares. That's about 3x what it was before. So the days to cover has decreased substantially, I think, because the volume has increased substantially, right? And if we look at the stock price of MMAT, we see that, in the bottom we see the volume, and the volumes are very peaky. They're very spiky, right? There was a huge ton of volume on Friday, just about around the close of day. Huge, 70 million shares almost. Huge, right? On Monday, huge amount of volume at the start of the day, and then no volume the rest of the day. Tuesday, huge volume at the start of the day, no volume end of the day, right? So, and the stock price has plummeted from almost $2 a share down to about $1.09 now, $1.10, right? So it's come down a lot. Okay. So, as a result, to recap, the net result of the offering is that Metamaterials is going to get about $46.5 million in cash. They're going to spend $5 million to develop the Oro Grande project, which means the Oro Grande project is worth something. Otherwise, I wouldn't be spending money to develop it. They're going to have about $41 million in cash after that, right? But there will be a dilution because the share count has increased to 360 million shares. If and when those warrants get exercised, that'll be an additional $60 million and an additional $60 million that goes to metamaterials, which means metamaterials will have gotten about $100 million in cash as a result of this offering. Okay. What does this mean to the other players in the game? Meaning, what does it mean to the new buyers? The new buyers directly got their stock, right? We know that the new buyers aren't planning to sell the stock anytime soon because they paid a higher price than the current market price for it, okay? We know that the new shares did not decrease the difficulty to borrow because the cost to borrow is still incredibly high and remains to be incredibly high because those new buyers, they can't sell any of that stock yet. They're not going to, right? They can't exercise warrants. So, yeah, nothing's basically happened. It was a direct offering. What about the shorts? What position are they in? They still need to borrow shares that they don't have. The days to cover has dropped, but that's due just because, we now have larger volumes. Okay? 69 million shares on Friday, 24 million shares on Monday, and 22 million shares on Tuesday. Those are much higher volumes than normal. Okay? That's why the days to cover dropped. So we'll see. And in terms of the Torchlight metamaterial shorts, they need to cover those MMTLP shares before Oilco spins out. And that hasn't been announced yet when that's going to happen, but that's probably going to happen. So, that being said, let's talk about oil prices now, and MMTLP and how it's affected by that. This is the price of oil for the last 2 years or so, a little over 2 years. Okay, we see that it plummeted in 2020 to going negative, and then it increased dramatically, and now it's been around $110 per share. $110 per barrel for quite some time. Okay, so the average price per barrel, if we look back in time, the average price, if we look back 1 year back, has been increasing, and it's been increasing substantially in a nice, slow, steady gain. It's now $87.18 per barrel, heading towards $90 per barrel soon. And that's what's been happening. If we look at the estimated value of the dividend, right, I made this chart quite some time ago. Things haven't changed, so the chart's still the same. I'll provide a link as to how this chart was made if you care for the details. But this is my estimate of what the dividend's going to be based upon the price of oil. Okay, so as of 6/28, we're seeing that the price of oil is $110 per barrel right now today. But if you look back on a 1 year average, it's about $87 per barrel and increasing, right? So that means that last $85 per column is basically going dark. And we now are expecting a dividend somewhere, or a dividend value somewhere in the range of $53 to $77, right? Somewhere in that range is going to be what the dividend value is going to be. I'm not saying we're going to get dollars, but it'll be the effective value in terms of dollars, right? Now, if we look back just to the start of the year, the average price of oil was around $68 per barrel. And it was the instantaneous price of oil around the start of the year, January 3rd, 2022, was around $74 a barrel. Okay. The one year look back is around $68.74, and the instantaneous price was around $74.50. Okay. That means you were way back here in where the red is, right? January 3rd, 2022, you're looking at a possible Divi payout or Divi valuation of $31 to $35. So although we had to wait a long time, and we're still waiting, the effect has been that the dividend amount or the value that we will receive per share has increased substantially. Almost doubling even, right? And it's still on an upward path trajectory. Okay. So what does that mean for MMTLP? The plan has still and always has been and always will be remained the same, right? The plan is to spin out Oilco, retire the MMTLP shares, maybe do some limited production, and that would convert the designation of the reserves to proved from probable/possible. Okay, that will increase the price of the Oro Grande project significantly. Right? Maybe we'll drill some more test wells along the way as well too. Right? But chances are, we'll probably sell some oil and gas, and that'll, for the Oro Grande project. And by selling that oil and gas, we'll have proved reserves. And then we'll be able to extract maximum value for those oil and gas assets, right? And once we've got that maximum value, we can pay out the dividend to MMTLP/Oilco shareholders, because the MMTLP shareholders will become Oilco shareholders at that point. In addition, now we know we've got $5 million allocated for development costs associated with oil and gas assets in the Oro Grande Basin. Okay. What does that mean with regard to the spinout process? Okay. The S1 is going to be filed with the SEC. MMTLP will be the result of a dividend of Oilco shares. Oilco shares will only be available for metamaterials. Shorts for MMTLP need to, they have to deliver the Oilco shares to broker-dealers who will deliver it to the longs. That's just the way it works. Okay. The only possible, the shorts have no access to Oilco shares. They only come from metamaterials. Okay. So the shorts have to deliver something they don't have access to. That means they're trapped. The only possible solution for the shorts is to close their MMTLP short position before that last day of trading of MMTLP. That means they got to buy MMTLP, right? And that's if they want to avoid the delivery failure for Oilco before that last day of trading, okay? Because on that very last day of trading of MMTLP, the shorts, the broker-dealers, and the shorts, they have to deliver the Oilco shares to the longs. That just has to happen, okay? And the Oilco shares are not tradable. So shorts are basically trapped. They got to deliver something that they don't have access to. Maybe they can, get out of their short position with MMTLP as soon as possible, but tick-tock, time's a ticking, right? Things haven't changed in that respect. Could the price go astronomical? Yeah, as a result, because when shorts are trapped and the price is, at some point they have to buy at any price. So I'm not a financial advisor. This is not financial advice, okay? I'm just saying this is intended for entertainment and educational purposes only. Could the price go significantly higher than what the dividend valuation is? Yeah, it could. Am I making any advice with regard to finances on that? Hell no. Definitely not. Okay, this is for entertainment and educational purposes only. I had some thoughts on some high oil prices because I heard some things about some new EPA regs in the Oro Grande Basin, and I was just totally shocked. I saw this tweet from CPLANT, "The trend is your friend." Abbot speaks out against EPA's proposed plans for the Permian Basin. Okay, what is going on? Well, turns out that there are new regulations in the Permian, right? The regulations have to do with basically the EPA is considering a new label for parts of the Permian Basin that could deter or slow oil and gas drilling in those parts, right? The EPA could label the parts of the Permian Basin as violating federal air quality standards for ozone, okay? And that means you got possible regulatory action. And that adds yet another element of uncertainty to the oil industry. Okay, they're already facing an unknown future. At the same time, they're being chastised for not investing to produce more. They're chastised for not investing more to produce more. In an element, so what's the deal here? The future's uncertain. The EPA is adding more uncertainty. Are they trying to increase the price of oil? Probably. Okay, creating uncertainty on permitting and inserting unnecessary regulatory barriers will only negatively impact the production necessary to meet the needs of consumers. Todd Staples, president of the Texas Oil and Gas Association, told Bloomberg. Okay. What does that mean? That means they're not going to be, that means, they're not sure what the future is going to be because of these new regulations. They're going to not pump out a lot of oil because they're not going to spend the money to pump more oil because, that new equipment that they spend, that could be worthless because they might get shut down tomorrow. If they're shut down tomorrow, why should they try to build more equipment and pump more oil? Why should they build the infrastructure? I mean, what does that mean? That means you're going to have a lot less supply of oil. And a lot less supply of oil means a lot higher gas prices. Okay. This is the article that the link from CPLANT directly went to. So the other article was an oil and gas article. Was an oil price article, which basically confirmed this link. Governor Abbot today sent a letter to President Biden on the U.S. EPA's plan that could jeopardize a quarter of the nation's gas supply. Okay, EPA recently announced it may impose a discretionary redesignation of the Permian Basin, which accounts for approximately 40% of all oil produced in the U.S. If allowed to proceed, the EPA's actions in the Permian could result in draconian regulations that would directly interfere with the nation's most prolific oil field. This is the letter that was sent. Links will be provided in all of this, don't worry. This is what he said. Dear Mr. President, you expressed concern about out-of-control gas prices while you express concern about out-of-control gas prices, your EPA is threatening to increase them even more. Okay? The EPA has begun a process that, if finalized, would jeopardize the production of 95 million gallons of gasoline per day, 25% of our nation's supply. The EPA's process could interfere in the production of oil in Texas, which could lead to skyrocketing prices at the pump by reducing production, increasing the cost of that production, or both. Okay. Your administration's announced action is completely discretionary. That means they have the power to stop it. Or specifically, the President Biden has the power to stop it. Blah, 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 blah. You can either stand with Americans by working to reduce gas prices, or you can side with the arbitrary and discretionary EPA bureaucrats who could impair oil production and jobs in the Permian Basin. I will choose the American people and my fellow Texans who are working to fuel our country. Okay. Good job, Governor Abbott, for bringing attention to this to the president, who can stop it now that he's aware of it, because he's got this letter. He knows. Okay. He knows. He can't claim ignorance at this point. He knows. He's got a choice: stop it or don't stop it. Here is the problem. This is page 2 of the letter. The EPA recently announced that it may impose a discretionary redesignation of the Permian Basin. This action could result in draconian regulations imposed by the EPA that would directly attack America's most prolific oil field. Most prolific oil field. Discretionary redesignation. They have the choice. Okay. They have the choice. Because time is of the essence in these EPA proceedings, we always know time is of the essence, and the bureaucrats can drag on. I must hear back from you by July 29, 2022. He's giving the president a deadline. If the EPA's proposed redesignation is not suspended by that date, Texas will take the action needed to protect the production of oil and the gasoline that comes from it. Governor Gregg Abbott is going to take action if the president does not suspend this discretionary redesignation by the EPA. Right? We'll see what happens. We'll see. Anyway, I'm not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. I was talking about metamaterials, Torchlight Preferred Shares, and the direct offering, the 8K, and oil and gas. It is June 28th. And I am saying goodbye.